So we have a ton to cover with what's going on in the overall state of the economy, and then of course Tesla stock. Now I'm gonna be honest with you guys. You guys know the meme with the dog in the fire? Yeah, you know, the one with the little coffee cup. That's pretty much where we're at right now.
This is fine. I'm okay with the events that are unfolding currently. That's okay. Things are gonna be okay.
Now I want to go ahead and break this down and explain why. However, I'm going to be honest with you guys. YouTube doesn't really reward when you go too deep into information. So if you guys want a deeper dive into the overall view of the markets, make sure to check out the first link in the description of this video, because it is a link to the Push and Profit private group. There is 75% off with a coupon code. However, you know, I'm going to go ahead and go as deep as I can on this YouTube video. So make sure to watch this video in its entirety, because I'm going to go pretty deep as much as I can, like I said. Now, I want to go ahead and cover a few things. Now, when we look at the Consumer Price Index report, which is really just a gauge on how inflation is doing, we see that we actually beat estimates, right? And it looks like inflation's going down. And then actually the pre-market for Tesla stock and the overall market shot up in the morning. However, once you start to kind of parse through the data, we actually see a different story. So what do we actually see? Now, when we look into the report, we see that energy has fallen down. Now, we know that energy hit a peak in the beginning of the war with Russia and Ukraine, and it's falling down. However, if we actually exclude energy and food, which is very volatile, and we actually look at core inflation, we're barely budging at all. Inflation is not even really budging at all. Now, this is a huge concern. Now, a bigger concern is that in the next inflation report, which is probably going to be the PCE report coming out soon, we're probably going to see energy tick back up again, right? And this is not good, because this just shows that the Fed is actually not even able to control inflation despite them hiking rates. Now, why are we going to see inflation tick up again for energy pretty soon? Well, we have this news that, you know, OPEC recently announced that they're going to be, you know, kind of slashing down on production, which means that oil is going to be much higher. Now, recently in the past, we've seen that if you just go to your local gas station, oil isn't as high as it was just, you know, months ago, right? Now, this is because, you know, the government tapped into its oil reserves. However, we can't just forever tap into those oil reserves, because those are used specifically for emergencies, right? Now we're heading into a time where we already tapped into the reserves, and OPEC is going to raise prices again by, you know, forcefully actually slowing down demand. Why are they doing this? Well, they know, okay, well, there is a weaker economy. You guys aren't buying oil like you used to, so we're going to have to slow down production and increase prices. So we're going to see inflation actually go upwards. Now, this is really bad.
This is bad.
So while many individuals have been saying that we're back into a bull market, one of the things that I just told the private group last night, and I really went into a deep dive, is saying that we are probably going to have more downside, right? Now, of course, I'm going to go ahead and talk about Tesla in the long term, but I want to go ahead and highlight something. So, you know, the reason I have this overarching view of things heading more to the downside is because recently we've seen the NASDAQ and we've seen the, you know, S&P 500 tick upwards, and we actually saw, you know, things going up. However, I want to break down why this actually happened. So we had a sector rotation. See, after we had a few of the banks fail, we saw a lot of money flood out of the finance sector and really flood into these big growth names like Meta, Microsoft, Tesla, Apple. They saw a surge, a recent climb up. However, you know, the reason this occurred is because we had money really flowing into safety. Now, why is this not a bull market just because we have money flowing into safety? Well, we know that, you know, these companies have a big weight in the NASDAQ and in the S&P 500. However, if you look at companies like Square, Zoom, Peloton, they're not really going up. In fact, they're going down, right? So in a bull market, even speculative plays go up. However, that's not the case. And so when we have a bunch of saturation into these big names, well, that means that evaluations are actually, you know, slightly extended, and we don't have any real cause for this. Now, I'm going to go ahead and talk about Tesla in the long term, because I am bullish for Tesla in the long term. However, in the short term, I'm not too bullish here. Now, I want to slow down the pace of this video slightly, because I know I said a lot of information. There's a lot of data happening. It's a lot to digest. So I think this is a great moment to really just kind of slow down and let you guys know that if you're not subscribed to the channel, maybe hit that subscribe button. And if you are already subscribed to the channel, make sure to hit that like button, maybe leave me a comment in the comment section down below, because I try to respond to as many people as I possibly can. Now I know sometimes I go too fast talking about all this information because I'm very passionate about, my views on, the overall market. Now with that being said, going back into a couple more, data points, I want to highlight something. So on top of the CPI report that we recently just got, we also had the Fed minutes. Now here's something interesting. So in the Fed minutes, we got to hear that several Fed officials considered a rate pause in March, but ultimately they all agreed to hike. Now in the Fed minutes, I'm not gonna go ahead and parse through the whole entire conversations, but we actually see that they mentioned about hiking 50 basis points, but they decided not to do that because of the bank failures. They thought, well, this is too much. So they're deciding to do an additional 25 basis points. Now, this is something I've said, a multitude of different times on the channel. I said it in a Push and Profit private group that, I suspect that by the next FOMC decision, they're probably gonna hike by 25 basis points. Now, this is not gonna be good for the overall market. Why is this not good for the overall market? Well, of course, it's making money more expensive to borrow. And the longer that we go hiking rates, well, that means things are going to be a little bit more tougher. And then you have to understand that, when the Federal Reserve hikes these rates, it doesn't really trickle into the economy immediately, right? It takes some time. So we're now going to start feeling some of the pain and the pressure. I mean, we didn't have these bank runs until a year later after the Federal Reserve hiked rates at the fastest pace that it's done in 40 years. Now, as we slowly continue going into the months, we're going to see more and more pain coming. So, my belief is that the Fed is going to continue hiking rates until, they either break something or they're just forced to pause. And then once they pause, here the problem is, that's going to be bullish when they pause. That's definitely going to be seen as bullish, but the problem is we don't know how long they're going to pause. They could keep, rates elevated at a high level for a long time, looking into maybe the end of 2024. I mean, we don't know. And of course, data can change. However, it doesn't look too good. Now, some of you guys may be asking, why are you, bearish on Tesla in the short term, but still bullish on Tesla on the long term? Well, here's the thing. See, the thing with Tesla is, although the overall markets may be shifting downwards because of the pain in the economy, Tesla is something that I believe is going to do very well going into 2030. Why? Because they have, and I said this a multitude of different times, it's almost like a broken record, but they have a big market share of the EV market. And a lot of these other companies that are trying to compete, these legacy automakers, like I say this all the time, they're losing billions of dollars trying to go into the EV space. And then in my last video, I talked about how the Biden administration is trying to really push forward with more rules to push more towards a EV economy, right? Where we have more EV vehicles. And who is this going to benefit? Tesla. Why? Because they are already profitable and they're not working towards profitability like these other companies. They're working on scaling and actually making their cars cheaper so that, once we have more individuals buying EV cars, who are they going to choose? The cheaper option, right? And then this is going to force the competition to have to lower their prices too, just to compete with the demand for Tesla. But you know who they're going to be hurting? Themselves, because when you lower prices and you're unprofitable, you're really just hurting your own company, versus Tesla will be able to do this. This is why, when Tesla announces these price cuts, a lot of people go all crazy about it, but I think this is very bullish for Tesla. Tesla stated this years ago that their goal was to make EV vehicles more affordable. So that's why I'm bullish on Tesla in the long term, but in the short term, yeah, things are not looking good, right? We're gonna have to really just pay attention to what's going on in, the overall economy, because things can, like I mentioned, shift at any moment. So we're gonna pay attention to that. But real quick, I wanna let you guys know, there is a link in the description of this video where if you sign up with Webull, you could get 12 free stocks valued up to $30,000. So definitely, sign up with Webull. That is the platform I use to trade. So definitely encourage you guys to sign up with that. You guys will get free stocks. And when I first signed up for Webull, believe it or not, I got a free share of Google that at the time was worth $1,000. Of course, this was before Google split. And obviously Google's worth, after post-split, it ended up being more like $2,000 just because I held that one share of Google. So you never know what free stocks you can get. So definitely check out the Webull link in the description of this video. And with that being said, guys, let me know what your thoughts are for Tesla, both in the short term and in the long term. And I'll see you guys on this next video right over here. Take care, guys.